Hi everyone, this is Nick Snyder, Associate Vice President with Cay Properties and Investments. Thank you so much for joining us on today's 1031 Exchange conference call with Cay Properties. We will begin the call with the risks and disclosures. This material is not interpreted to be tax or legal advice. Please speak with your CPA and attorney for tax and legal advice. All offerings discussed, if any, are Regulation B, Rule 506C offerings, which are only available to accredited investors, generally described as having a net worth over $1 million exclusive of their primary residence. Please verify with your CPA and attorney if you qualify as an accredited investor or accredited entity. The information is educational only and does not offer. It is not an offer to purchase securities or DST properties. Such offers are only made through private placement memorandums or PPMs, which are solely available to accredited investors and encourage our investment. Past performance does not guarantee returns. Diversification does not guarantee profits or protection against losses. Returns are never guaranteed and could be lower than anticipated. All real estate and DST properties could go down in value. Securities are offered through FINRA, member FINRA and SIPC. FINRA and Cay Properties are separate entities. Again, thank you so much for everybody for listening in, and I'd now like to turn the call over to Chay Lapin, President with Cay Properties.
So now we move into San Antonio Multifamily 74 DST. So this was a pretty unique opportunity. So as I mentioned, multifamily, when you go to acquire, this is the buoy asset. When you go to acquire multifamily in today's world, you're in a living, breathing. You got to really understand what's going on so that this changing world of cost, the landlords, cost of employment, cost of goods, cost of insurance, aggressive municipality increases on utilities and property taxes. So we're buying in an asset that's kind of, I believe, kind of the peak of all of that. So we can really understand and look at this previous owner's expenses and look at those expenses in today's world. 3 or 4 years ago when you did a pro forma, no one probably would have guessed that we would be at the point we are today. We would have guessed there might have been some inflationary effects. We might have guessed that insurance would have naturally gone up. We might have guessed that just general costs have gone up, but not at the rate that we've seen this fast. So deals from 3-4 years ago, those are having to really overcome a lot of hurdles. This is one reason why this seller is distressed. This seller is a distance owner. I'm not going to disclose exactly what country, just for privacy reasons, but they do live over in the European region. They had bought this asset and just in a way completely mismanaged it. Because you're managing it from another country, it's already hard enough to manage an asset when you're there physically. And it always has maintained a very healthy occupancy in the 93 to 95%. We were able to look through that data. 2014 construction, 102 units. So relatively newer construction, which has the modernization, attracts a quality tenant, good overall income, on our tenants that are there. But they've had a high turnover rate because it's been mismanaged. And that high turnover rate is interesting because when you look at their average occupancy of those 90+% occupancy numbers, historically over the years with this, even through COVID, they're re-renting them very fast, which shows us the demand. Even though they don't have the appropriate retention rate on their tenants, they're releasing them fast. And so us bringing in the new property management team that has over 40 years of experience, a lot of it specifically in the San Antonio and Texas region, so really understanding the market. We're moving employees physically there. There will be employees there at the office, so we have true boots and eyes on the ground. And I think we're going to have a pretty immediate effect just from management. We walked every single unit. That's rare. You talk to a lot of institutional buyers out there, they're going to walk a sampling of the units. They'll walk 10 units, get a sampling. They might talk to a couple tenants. We had our team out there for a couple days in a row, walking every single tenant and every single opportunity there was to talk to a tenant and introducing ourselves as the upcoming new owners and management. People are excited. And we have, some immediate modernization that we're going to do just to bring some things up to snuff. And although it was 2014, every 10 years, you got to get in there and do a couple modernizations on the insides of the units just to keep up with your competition out there. But this does have all your typical kind of, Class A amenities. It's got a gated, secure parking lot and secure grounds for the tenant. It's in this historical district area. It actually was an old peanut factory. That's why they call it, if you were to actually look at the name of the asset, they call it the peanut factory loft. So it's got this really cool industrial feel. A lot of the units are actually brand new ground up construction when they built in 2014, but there's a couple things that they kept there. If anybody's familiar with Chip and Joanna, if you've ever been over there in Waco, you know what the silos are, those historical silos that Chip and Joanna converted to their store or their operation there. Well, this is cool because this has some silos on the ground that was part of the old peanut factory. One of the higher demand areas and peak good healthy rents we get out of this location, that they converted those silos to apartments. It's got a good mix of 1 bedrooms, 2 bedrooms, 2 bedroom with 2 baths, 2 bedroom with 3 baths. There's a penthouse that's a 3 bedroom that apparently has been in very high demand. Because that's part of the historical side that has a really cool balcony on the rooftop. It's private. So just a really exciting mix. There's some private garages. Those are big in demand, especially in like Texas. You got all that rain. You got heat. It's nice. People like to keep their cars clean. Less money on the car washes. A lot of, we have, trash valet, dog park, fitness center, resort style swimming pool. So this is really going to add as more of one of our trophy assets on the multifamily side into our portfolio. We are pretty punishing on the underwriting on the deal in terms of our expense ratio. We would rather, and there's no guarantees, but deliver a consistent number up front. Because anytime you're buying a new asset, even though you do your best to understand it before taking over, there could be little speed bumps. So we did a pretty good job on punishing the underwriting in my thought and making appropriate CapEx budgets, things along those lines. We bought this for, I think under, don't quote me exactly, but under $150,000 a unit. That's good. And the reason why, getting back to the distress, the story. So this owner, I don't remember the date off the top of my head, but this owner had a loan coming due at the beginning of this year. We were in negotiations at the end of last year on this asset, and we knew that he had that loan coming. He needed to get an accepted contract so that he didn't have to really fire sell the asset, and then he didn't have to get in a foreclosure situation, a receivership situation. And so with us coming in as an all-cash buyer, it gave that lender confidence and the ability to allow him to have the extension while he worked through the contract. But on top of his normal loan payment and his expense ratio with the current property management firm he has, charging way too much for everything, he's negative on the deal, even at this 93-95%. And it's purely because he's paying way, 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 way too much money, probably 4 or 5 times the cost that our property management costs plugging in. And then he's also negative because he has a hard money loan for whatever reason. We don't know his personal situation, but he has a hard money loan that someone had disclosed to us that apparently is at a floating rate, 12+% interest rate. And so he's been very cordial, great to work with. But it's good because as we go in and we run into things that, maybe we want credits for certain repairs and deferred maintenance that's happened over the last 10 years. As I said, it's 2014 construction, but after 10 years in an area that does get weather, has different really hot, rain, etc., cold during the winters, there's things we want to update and clean up, and he's been very good to work with on getting the appropriate credit. So our reduction in the price is even getting better and better and better for our investors. And so I don't want to dive too much more into, but just as a reminder, that's, a multifamily building in San Antonio, Texas. We already own a lot of assets there, specifically in San Antonio. We have employees there. We're in Houston, Dallas, and Austin as well. We're really excited. And if any of you guys want more detailed information or the PPMs, the prospectuses on, multifamily 74, please don't hesitate in reaching out. We would really like to continue on walking you through these and maybe other potential offerings that might fit your goals and objectives.
So if you visit kpi1031.com, you'll be able to log in for free access. And then also you'll get a number of different resources available to our investors on kpi1031.com. You get a free book, 1031 DST properties. So we'll send you a copy of that. A free subscription to the 1031 DST Digest magazine, which has all sorts of case studies, tenant overviews, educational resources and articles in the 1031 DST Digest. You'll get access to free educational 1031 DST conference calls. We host weekly conference calls every week with our investors on various topics in it regarding 1031 exchanges, asset classes, financing, debt-free, zero coupon offerings, different strategies to use when thinking about a 1031 exchange into DST properties. You get very, very educational conference calls. We'll get you access to those.
We've done a lot of these DST transactions. We've helped thousands of investors nationwide complete 1031 exchanges into DSTs. We're here for you. Reach out to us at any time, and just really appreciate everybody taking the time to join us today.